Welcome to Power Charting. I'm Bruce Fraser, your host. Today we are going to look at the IPO boom and prior IPO booms. Also, we are going to have an introduction to the decennial pattern, which is really a fascinating phenomenon. Welcome, and let's get started. So we're going to look at three IPO booms. Then we're going to look at the decennial pattern, and we're going to finish with an intraday analysis of the important indexes. So with that, we have a very exciting thing coming up on Monday, actually, is that there's going to be a panel discussion hosted by David Keller. And three of us are going to be having a discussion with David Keller about the presidential cycle, a technical perspective. This is not going to be a debate about politics. It's going to be a look at the market. So it's going to be a lot of fun. We are going to have Jeffrey Hurst, Stock Traders Almanac, who does exceptional presidential election cycle work, Tom McClellan, and myself. How I ended up on the panel, I have no idea. But anyway, I'm going to give you a little bit of a preview of what I'm going to talk about, and I'd really love for you to be there. So also, it will be on the StockCharts TV YouTube channel for later viewing, I'm sure. So here we have the presidential election year, and we have looked at this chart repeatedly. And this chart shows, again, this fabulous rally in August, which we had, with the climax into early September and a reaction into October, followed by a run up to a series of minor new highs, diminishing thrusts into the end of the year, into the election and the end of the year. Now, the caveat is it certainly can the year can finish differently from this, and it has in presidential election years. The caveat also is that this is going to be a tight election, could have a number of things happen here, including a contested election. This could have an effect on the market. So this will be a great theme for us to discuss on Monday morning. So please join us for that. The time is not set yet, but I think it's going to be East Coast time, early afternoon. Okay, so here is the 10-year decennial seasonal pattern. And I'd like to thank Dimitri Speck for allowing me to use his charts for the seasonal work. And I've got a secret for you. Dimitri has said that he is going to be a guest on Power Charting. We just don't know the date yet. So that's going to be a lot of fun. He does incredible seasonal work. So this goes back to 1897, and it's the 10-year pattern starting with the 0 year in the decade, going through the end of the 9th year of the decade. And so many decades, it's remarkable how much the market rhymes or has a similarity to the look of this decennial pattern. This is going to be part of what I'm going to talk about on Monday. I'm not going to talk as much about the election cycle per se today because I want to save that. But here is an example of the S&P 500 going back to, in this case, 1980. So this 1980 to 1990 pattern is one of the very best, closest patterns of the decennial to what happened in the decade. So you can see the peaks and troughs here. In the 7th year, you have an important psychological and climactic peak, followed by a reaction in the 4th quarter Well, this was the 87 crash that we see here. Well, pretty stiff decline in the seasonal pattern also. The other thing that's interesting, well, you can see through the middle of the decade how there tends to be generally a good bull run, and followed by a smaller but still substantial run into the end of the ninth year. Here is an important thing is the 0 to the 2 year tends to be the weakest of the 10-year decennial cycle. And this is exactly what we saw in the 80s. And so here we are in 2020, we're in the first year of a new decade, and it's been a crazy year with the market being able to generally, depending on the index, work its way back up to its prior highs and slightly higher, but a market that appears to be somewhat range bound, and we'll look at that a little bit more later. Here is the, again, now I'm going to sort of bring the decennial in with the IPO boom process also. So here are 3 IPO booms, and I just want to show you the NASDAQ composite, which is really a measure of smaller cap growth historically. Now there's some very large cap names in the NASDAQ composite and the NASDAQ 100. But here you can see the stride is set here and here, reverse use of trend lines, and this incredible acceleration into the dot-com boom that occurred into 2000. So here we are at the end of the decade, right into the finish of the decade, you have an IPO boom in 2000. Also, well, I was going to make a comment about the presidential cycle, but we'll save that for Monday. So I want to also point out that in here, and this was, I was working in the industry, and I was working in Silicon Valley, in and around it. And here was an IPO boom back in 1983. Well, there had been a from about 1976 to 78, there had been a substantial run up or boom in growth stocks, which was reflected by the NASDAQ composite in that period. So there was a secular dominance of growth over value or blue chip stocks from the late 70s into 83. And that was a substantial IPO boom. So here are the 3 booms, and you can see here that using, again, reverse use of trend lines, that there's been an important run up in the NASDAQ composite above the trend line, the overarching reverse use of trend lines here. And potentially this could represent some kind of an IPO boom, and we'll look more at that in a minute. So here you can see the relative strength also is accelerating, as it did back in 2000, as it did back in 1983. So here you can see that this is from Bloomberg, and this represents the IPO equity issuance or equity issuance in the second quarter of 2020. And this is a really substantially high number, 134 billion in the second quarter. And this goes back to around 2008 and far shatters any prior equity issuance in that period. Now, keep in mind that this is what Wall Street does. Wall Street wants to issue stock when they can get the best valuations and there's the largest appetite for the for this equity issuance. And so with this incredible run in the NASDAQ stocks, in the NASDAQ 100 in 2020, this has been an exceptionally good time to issue IPOs. So here is not only IPOs, but all equity issuance. And so also here's a headline: IPO market is headed for the busiest third quarter since the dot-com years, and there's lots more to come. So here is the dot-com years and the incredible acceleration of those stocks and the relative strength, which was substantial into that peak. Well, the question now becomes, is this the end of the cycle upwards, or is there potentially more to come? And as you can see, this was a run up that lasted quite some time, so about 18 months. And it's very possible that there could be more life or more time in this IPO boom. There's been discussion that these these companies have wanted to issue their IPOs prior to the election. So probably going into election time, it will quiet down and be quiet through the remainder of the year. And then depending on the condition of the market and how the market reacts to the election, with the IPOs will probably just start right back up again, especially if the market stays up. So here is the decennial pattern with the NASDAQ 100 going back to 2010. So this is the decennial pattern lined up to the NASDAQ 100. And what you can see here is the incredible um, persistency of the NASDAQ 100 advance through this whole period. And so it's really had an upward bias even to the 10-year decennial. So really quite a remarkable 10-year stretch for growth stocks. Here is the 10-year decennial with the NASDAQ 100 with trend lines drawn on it. Now this gives us a picture, again, reverse use of trend lines. The trend lines are over the market here. And you can see that this primary trend line has been touched repeatedly going all the way from 2011 into 2020. And then in 2020, into the third quarter, there was a run up and out above the trend line, which is a throw over and an overbought condition on a very long-term time frame. So this is pretty substantial, and we want to really pay attention to this because we're also getting that acceleration of IPOs as you would expect. This would be the classic time for the IPOs to really come out. Now, the key with IPOs is that they represent a form of supply of stock onto the market. They absorb capital. And investors, whether they be institutions or individuals, when they go buy these shares of stock, this is cash that is not available to other parts of the market. So in a way, it's a supply demand issue where supply grows or becomes larger and absorbs the available demand. And so this can be in a sense, a negative. Okay, so here we're looking at this throw over of this area. The only other thing I would add is that if we have a turn back below the trend line, so as long as the NASDAQ 100 can stay above this very important overarching trend line, it's going to be, I think, generally positive for the NASDAQ 100. If it comes back into the trading range, it's certainly possible that it could return back to the moving average or even back to the bottom of the channel. So we want to use that as an important indicator of changing conditions. Now, here is the NASDAQ composite. Also 2009 to 2020, similar to the chart that we just looked at, the difference being that we're looking at the relative strength of the NASDAQ composite to the S&P 500. And our main interest is, when is there rotation towards growth or towards blue chips, towards value? And we're using the S&P as value here, or the older more staid stocks in the market. The NASDAQ composite representing the smaller growth names. Now that is not as true as it used to be in the past because there's some really large stocks in the NASDAQ composite now. But you can see the NASDAQ composite on this relative strength is really showing an acceleration during the 10-year period. And it's really accelerated in 2020 out of the trend channel, which creates the conditions for IPO issuance. Here also you can see that using the NASDAQ composite, it also has thrown over the top of its trend channel, and very well defined trend channel. And really based on these 2 points right here back in 2010, 2011, that set the stride for this advance that has gone all the way through the decade. So quite substantial, a series of touches here, and now a throw over and a climactic type surge where we're going to be watching to make sure that it can stay above the channel and then continue to move. If it comes back in, just as with the NASDAQ 100, we would be very cautious if we saw a reversal there. So keep in mind that this relative strength upward movement could be reversed and turned down, as we saw happen in the 3 IPO booms chart that we just looked at. Now here, I want to kind of make a point with looking at this 1978 to 1983 IPO, or really a growth stock dominance, in which we actually started back around 76, 77. This is as far back as we have data for the NASDAQ. And you can see here that there's an upward trend, well-defined, overbought right here into the 83, middle of 83, end of the second quarter. Also, you can see the relative strength of the S&P also peaked at the top of the trend channel, turned back down after around a 7-year growth stock dominance, turned back down and has turned to the bottom of the channel and then out. Well, blue chip went from being a laggard to a leader. The thing that we saw in the decennial pattern for the 80s was, and this is a point I want to make relative to now, is that there was a pretty bad recession from 1980 to 1982, and the stock market really had a relatively mild decline, even though it was a reasonably important bear market. Valuations for stocks was exceptionally high. Stocks were inexpensive, low PEs, high yields, very high interest rates in the bond market. And so even though there was a pretty substantial recession in the first 3 years of the decade, 80, 81, 82, and into 83, the bull market started in middle of third quarter of 82, is that the through this whole period, you can see that there was just a continuation of the leadership of small cap growth to blue chip value stocks. Well, the rotation of the relative strength into this important climactic surge was an IPO boom. And then off of that boom, there was an important top that was really a somewhat of a V top, and it turned back down. And then for the rest of the decade, you had a declining growth characteristic, meaning that growth stocks were underperforming value. And so these value stocks were the ones that took over. It's where the rotation was. And I believe that it's very possible that when this growth boom ends, and it may still have life in it, but when that growth boom ends, we may very well see a rotation from growth to value. And of course, that is the game. Institutions are very focused on one, creating positive return in their portfolios, but also they want to create relative outperformance. And so currently they're creating relative outperformance in important growth stocks and in emerging young small growth stocks. But eventually, once that rotation starts to occur and turns to value, those value stocks are going to come in and start to have leadership characteristics. Well, that is what this red line represents, is that value or blue chip is starting to lead in its rotation away from growth towards large cap and value. Notice that in the S&P 500 that there was a tremendous bull run from 84 into 87 before the October crash, and then the trend continued on into the end of the decade. So this, I believe, is a scenario that could come to pass, and we will be watching for that. Here is the S&P 500, and we're looking at the decade of the first decade of the century, 2000 to 2010. And you can see here, I just want to point out, this was the dot-com peak. The IPO boom comes to a conclusion in 2000, turns down, and you have this bear market. This bear market is a stiff bear market in the first 2.5 years of the new decade. So this is a substantial decline, builds a beautiful base in 02, 03. Well, look what happens with the IPO boom concluding. And so one of our conclusions here is when the IPO boom ends, history shows us that this is likely the end of the growth theme, that IPO issuance and the surge of IPOs tends to come late in the cycle, and we're seeing lots of evidence of climactic behavior up and out of these important trend channels, which we just looked at. And so now we can see a very sharp turn down in the growth stocks. Well, this means that the value stocks, the blue chip stocks, are performing better than the growth stocks. Well, look at the S&P. The S&P went down substantially from 2000 to 2002, a substantial decline. This just means, this line here, that the growth stocks went down much more. Then a new bull market emerges, and this new bull market carries the S&P stocks up into a new bull run, which is just as in the 80s. It's dominated by blue chip, dominated by value, and the growth stocks are at best market performers throughout this whole period. There's no real advantage to growth over value during this period. But then late in the decade, you start to see outperformance, subtle outperformance of growth. Now, we'll conclude this discussion here with this. This is our value ETF to growth ETF indicator, and we can see that there is an attempt to make a base here, but this downtrending line continues to dominate and hold down value. If we see value start to make higher highs and higher lows throughout this period, then that would tell us that the value theme is starting to catch on a macro basis. So this is why we watch this chart and we'll keep an eye on it. This area here on this 4-hour chart is right here. So very long term, going back to 2014, you can see the underperformance of value relative to the triple Qs or growth Qs as a proxy, that now with the 2020 advance in the triple Qs and in the NASDAQ 100, this has thrown under this downward trend for value, and so it's an oversold condition. But what we need to see, and that is just this is a blow up of this chart here, is to see it turn back up into the channel. Okay, now we're going to switch gears and kind of get into the current market with the time that we have left. And I just want to show you this put call ratio, which we tend to look at a lot, but this put call ratio has turned back down on a 10-day basis, 10-day moving average, pretty sharply off of the September decline. So normally we expect to see sentiment reach an extreme of bearishness when it gets up to the yellow line and above on a 10-day basis, and that shows that there's quite a bit of bearish speculation in the markets, a lot of put buying. Well, that tends to come in around the levels of important lows. Here, when it gets below the pink line, that tends to show that there's extreme bullish speculation, which is contrary-wise bearish. Well, look what happened. This rally, which has been going on for so long now, since March, has gone up into a climactic surge into September, had a very extreme reading of call buying in this ratio coinciding with the September peak. Well, there was a rally in this indicator with a decline in the market, but all it did is get back up to its normal extreme reading of too much call buying. And then immediately with the rally turned back down again. So this is really an interesting situation, because this suggests that there's a lot of bullishness in the market right now. And as soon as the market tries to go up again, the speculators start to buy calls right away. We normally think of the market as climbing the wall of worry, and that speculators and investors tend to jump onto a rising trend late in the trend, not early, because they're too cautious. Speculators are no longer too cautious. They're jumping right in and speculating on the upside right away. Okay, now I'm going to stop here for a sec because we are going to look at some different charts. Let's turn our attention to the intraday of in this case, the Dow Jones Industrial Average, and we can see that there's this stride of the advance that was formed going back to the March-April lows, and it has worked quite well picking up these important lows. And then finally, it broke down out of the upward channel here in late July. Here's a buying climax that we looked at that time. Look at this big gap in here. And then it goes up to the overbought condition and then turns down with a gap and goes down towards the bottom of the channel. Well, this set up a range bound condition. And so automatically when we get a buying climax and automatic reaction, we draw resistance and support. Here we've fallen out of the channel, rallied back up to it, slightly exceeding it, but then being turned away from it again. So now we have the issues of the demand line and also the resistance line at work. This looks like an up thrust, which we called this an up thrust a few weeks ago. And now it turned back down into this area. Well, the big question we have, because this is an hourly chart, is this potentially a larger trading range or distribution structure? Well, we have a little bit of weakness here. We talked about the put calls. And so our concern would be that if we get a return back below, which is around 27,500, we get a return back below the resistance line and come back into this trading area here, that could be a concern for the for the trading range, and then potentially coming back down to the support area. Okay, and now let's move on. Here is the NASDAQ 100. The NASDAQ 100 has this important stride that really defines itself in April, May. This is reverse use of trend lines. We've looked at this chart repeatedly going back into the early part of the year. What I really want to show you here is this decline out of the channel after a buying climax and up thrusting action, which is an overbought condition, and then a return back below. Now it's rallied back up to the underside of the channel and now has turned back down off of that. This looks like it has accumulation characteristics. We will see whether or not there is good support just below this area, and then the ability to turn back up, especially going into the election period, and we're into the final 20 days or so. So we have that. Here's a brief look at the NASDAQ 100 hourly chart. Similar chart, you can see the decline through the demand line and now an attempt to rally up, and this is through today, midday today, and a little bit of a gap as it's turned back down here. So this is going to be interesting to see whether or not there's more weakness that comes in as it's turned away from the upward sloping trend line. And here's the S&P. You can just screen capture that and have a look. Overbought, throws over the top of the channel, and then fails, which you'd expect. And now we have a test of this overbought condition here and a test of that. And with that, we're going to say goodbye. Thank you for your time, and we'll see you on Monday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.